Hey guys, good afternoon, everybody. Today is Monday, February 10th. It is 3:58 right now. We're about 2 minutes early for the mentoring session, so I'm gonna go ahead and set up this session real quick, and then we'll get started shortly. Got a few things here to update. Good to go. Now we haven't had a mentoring session in a while. Let's see if I remember how to do this. Good to go here. So let me get this link sent out to you guys here in the premium. Sent out. Oh, all right. I'll give it a few moments for people to make their way in. And as people make their way in, let me just make sure I have the criteria up here. Or I'll just wait. I'll wait for people to make their way in, and then we'll get started shortly. So, all right, guys, good afternoon, everybody. Today is Monday, February 10th. It is 4 o'clock. Our scheduled mentoring sessions for 4 o'clock. So, if you guys have any specific questions, feel free to put them in the chat. Otherwise, our main focus for today, and I'll put it over here real quick. Main focus for this mentoring session. We're gonna go over MPS, or I'll type it out, momentum pullback scalp V2 strategy. How I identify direction market, buyers versus sellers, and then MPS V2. I'll type it out. Momentum pullback scalp V2 A++ entries scenarios. What's up, Steven? Long time no see. Good to see you here on the mentoring session. Have you still been training, Steven, or you just been hanging out? Because I haven't seen you in a long time. So good to see you here. Glad to see you're still around. All right, so this is going to be our main focus for the mentoring session, guys. If you guys have any specific questions, feel free to put your questions in the chat. But this is mainly what we're going to be focused on for today. We're going to be covering the momentum pullback scalp V2 strategy, how I identify direction of market, buyers versus sellers, and then also momentum pullback scalp V2 A++ entries and scenarios. Not A+, but A+++. There's a lot that we kind of put into this here where the entries, and I'll show you examples. I'll show you why I consider them A+++, because they're really good entries. You guys will see them as I pull them up. I'll pull up like random dates so that we don't have to go specifically with what happened recently, but I'll go over very specific dates for when, or I'll go over specific dates and I'll go over random dates, so that you guys can see I didn't plan this. It's just the setups are really good. What's up, T? How's it going? All right, guys. Looks like everybody who wanted to be here is here. So we'll get started with the session. If you guys have any questions, feel free to put them in the chat. I'll cover whatever questions you guys have. Otherwise, this is gonna be our main focus for today. So I will take this off shortly and we'll get started. So first things first, we're gonna cover the momentum pullback scalp V2 strategy. I have criteria here that I created for Mike. Mike's one of our newest members here. I just created like a quick criteria, but I'm gonna edit it because it's not necessarily super necessary. So where did I put it? That's weird. I swear I put it on here. I mean, I could make another one. It's not a big deal, but I swear I made one. I keep saying I'm gonna fix this, and I never clean this up. I got so many strategies on here. You know what? I'll just make a new one. It's not a big deal. I'll put the actual criteria here. So this is gonna be the strategy for momentum pullback scalp V2 strategy. So one is identify direction of market or identify current direction of market. That's gonna be step one. We'll go over that stuff in detail when we get down to it. Second, identify momentum signal using, I should put this stuff in caps just because we want things to be linear. Identify current direction of market. Identify momentum, direction of market. Spelling there, momentum, direction, market. Third, identify push in direction of, I mean, actually, we don't really need that. So next is identify tracement against direction. Market. Fourth, firm. About to identify confirmation of situation, direction of market. And then I think that's it. Yeah, I think that's it. And then lastly, insert on close of team ratio handle. And then 6, TP stop loss, and I'll give a couple different options here. So TP stop loss 2020, 20, 30, 30, 30, pending on market conditions. All right, perfect. I think that's it. Pretty straightforward. Ready to go. There we go. All right, let me make this a little smaller. All right, so here goes the criteria for the strategy. So I'm just gonna take this off. We don't really need that. This is like the basic criteria for the strategy, guys. Like I said, I'm looking for the very A+++ data setups. I'm not necessarily looking for all entries, but just to show you guys a couple of examples of like how this specific strategy works. Let me see if I can find one because I don't think there was. I mean, the market was like pretty slow today, so there wasn't too many, opportunities for this. I want to find one that like looks good that you can actually see, and I'm going to make sure that there's no red flags there. The volatility was too low to, oh, here's one right here, actually. We'll use this one. This happened at 10 o'clock. So what I'll do here is I will go back to this right here. So you don't need the trend for this specific strategy, but you do need to know how to identify direction of market. So the way that, this is actually not a good example because there's no confirmation of direction here. When price pushes up, this is like a good setup because there's a buy signal, price retraces back, closes up right here, and then there's an entry there for MPSV2. But there's no, unless you know how to really identify the direction of market, I'm going to try to set it up in a way that I'm going to kind of dumb it down in a sense that it's not very difficult to follow. Okay, so I think this one right here, this example would work. It's not the best example, but it'll work. Never mind. Take it back. There's a red flag right there. There's a session. So I'm probably have to go back to another day because I don't think there was no entries here that weren't around red flags. Let's see. Nope. No. Let's go to yesterday's market. We didn't take any trades today because of the red flags. Obviously, price was like in between this area the whole time. Let's go to yesterday's market. And or not yesterday, but Fridays. And I think there will be opportunities there that we can actually see pretty decent. All right, so we had market over here. Okay, this is actually a good example. Never mind. Another red flag right there. This is the trade that I wanted to take on Friday, but we didn't take. These past 2 days, prices kind of been in the area of like red flags the entire session, which has been kind of annoying. You weren't able to take certain entries. Okay, this is from Friday. Let's see if I can find one where there's no red flags. There's a lot of setups here, but there's red flags, so I wouldn't be able to take them. Let's see if I can find one here. Okay, actually, I think there's one here. Let's see. Okay, perfect. There's actually one right here. It's not a super clean entry, but it does the job. So just want to make sure this red flag isn't too close. Okay, it's pretty far out. It's about 80 points away. The volatility was just really high last Friday because it was NFP. But here is the criteria that, again, it's not going to be the best criteria, but actually, I don't want to use this example. I'll go over it real quick of like how it would look like, but this isn't a good example because it'd be hard for a person who's not experienced to identify direction. But I'm just going to kind of show you guys a little understanding of like how I identify direction of price. So basically right here, you can see how price was pushing down. I'll start from like this end over here. So from right here, if you guys have been on my live sessions, I basically, I'll look for like a high point. So for example, right here, there's a high right here, price pushes up and then it comes down. In this situation right here, I'm like, okay, this is a high point. I'm identifying price pushing down from this point here, right? Because it never gets broken. Like there's a high point here and price pushes down, retraces up a little further and then pushes down further. On top of that, there's like a lot of these engulfing candles, V1 variations, etc. throughout this area, showing that the sellers are in control. So in order for me to identify direction of market with regard to buyers and sellers, I look for a high point and I look for confluences here indicating that the sellers are in control. So this candle right here is a high point, and this candle is also an engulfing candle. So with that said, I can see here that From this point right here, the seller started to get in control. Price pushed down, retraced up, pushed down further, and then it consolidated sideways right here. This is how I identify the direction of market. So in a situation like this, I would only be looking for sells. And then vice versa, you can see over here that there's a new low. And with there being a new low, you can see price here pushes up. And then we have an engulfing candle right here, indicating that the buyers are in control. So like typically when you're looking at the direction of market, you're basically looking at price to either be going down or going up. Price can go sideways, but you can see over here, even though price was going sideways, it was still going down, right? So like, yeah, it's not a straight push to the downside. There's a lot of different criteria here that you can also look around. You can see that, you know, the trend here is bearish, right? Price is pushing down, trend here is red, pivots are angling to the downside, price was below the pivots. There's a lot of different criteria here that you can use as a confluence to identify who's in control. But for me personally, I like using price structure or market structure to identify, you know, who's in control here. There's just a lot of different ways to do it, but for the most part, I think this is probably the easiest way, because the thing with the trend is that the trend is lagging. So if you're just looking at price action and you're looking at how these candles are moving, you can identify who's actually in control without having to follow the trend. Like you can trade against the trend, because for example, here you can see like having this right here, you can see the shift, and before price even gets above the pivots, you can already predict that price is going to go up, right? So if I'm to fast forward this, see how price pushes up, we pretty much knew that the buyers were in control from right here before price even got to this point above. So it kind of gives you like a head start. And that's what I like about identifying direction like this. That's the whole reason why I created this extra indicator to identify reversal patterns. Because it gives you like that extra, like you basically get in a lot earlier than others would. Because like for a lot of people, they probably wouldn't wait. They'd wait until this here is confirmed, right? Which is fine. I mean, if you want to wait for this to confirm, you know, great, you can get in from right here. But since we already identified this right here, you can get in from way lower. And you basically got in about like 30 points before everyone else. So here's an example of a momentum pullback scalp V2 strategy. I'm not gonna, well, I'll show you a quick run through, but I'll go over a better example later that shows you like more criteria. But again, right here, so first identify direction of market. For this right here, sorry, you got Kodi over here scratching. Kodi, you gotta chill out, buddy. Just trying to get a comfy spot. Yeah, you're too loud, okay? Chill out for a little bit. Anyways, so looking at this right here, first criteria, let me go back to this candle over here. First criteria is you want to identify the direction of market. So like I said, we have a low point right here. And from this low point, price is pushed up and never really came back down to break this low. So the buyers never got validated here. They actually got confirmed. So with that said, this right here, this is going to show you that the buyers are in control. I'll show you later, more examples later that are going to help you identify this a little better. But this is just a quick, you know, quick rundown of like how I identify the direction of market. There's one confluence here. The problem with this confluence is that this confluence came up with the entry. So it's kind of too late at this point. Like you don't want this confluence to happen somewhere before, so that when the entry comes up, you're more confident about the position. And this will also line up with the A++ entries that we discussed earlier. And we'll go over examples for that as we progress. But anyways, first identify direction of market. We have a bullish direction here. So I have a green line at this point. Second, identify a momentum in the direction of market. We have a buy signal right here. That is step 2. For step 3, you want to identify a retracement against direction of market. So this red candle right here is going to be a retracement. It doesn't have to be anything crazy, just like one candle in the opposite direction. So that's steps 1 through 3. Step 4, identify confirmation of continuation in direction of market. So what you want to do with that is you want to make sure that the following, it doesn't have to be the exact next candle, but you want to see a candle close above the momentum signal right here. That's going to be step 4. Identify confirmation of continuation in direction of market. So to confirm that, you want to see that price retraces and it comes back above this black line right here, because that's where momentum's at. Once you confirm that, you can enter on the close of the continuation candle, which is going to be this green candle. You enter a buy entry right there. Like I said earlier, TP stop loss kind of just depends on you. You can do a 20-20 if you want a 1-to-1 that's tight. I would typically base it off the ATR. If the ATR is like below 20 or around 20, I would do 20-20. If the ATR is a little higher, like 25, you might want to do 20-30 just to protect your position a little more. If the ATR is high, like 30 or 40 around there, you can do a 30-30. So because the ATR here is currently at 19, I'm going to use a 20-20, 1-to-1. And from there, I let the trade run. Pushes in profit and it hits TP on the next candle. So there goes an example of a momentum pullback scalp. I'll try to find another entry here, but I just don't really see anything yet. Let's see. CJ said 738. Let's take a look at that. 738. Okay, so 738 over here. Um, 738. Is it from today, from Friday, or is it from a different day, CJ? I'm here on Friday the 7th, so I don't see anything at 738. Because there's a session right here as well. So I wouldn't have taken any buys at that point. You might be on a different day, which is fine. I'll go back to a different day. I think you're talking about Thursday, right? Because there wasn't much here on Friday. I think we took one trade on Friday and that was it, or 2 trades. There was just too many red flags around here, so I couldn't take anything. Let's see, retracement, confirmation. Yeah, nothing. Let's go to Thursday. So I just want to find some good examples to show you guys that are a lot clearer than these over here. So let's go back to Thursday. I know Thursday after the session, there was actually a pretty good amount of entries. So let me just replay to Thursday and there's some that came super late over here. Again, red flag, but let me see if it provides opportunity here. Closes. Okay, so this one's again is a little too tight. Let's go over here. Okay, perfect. This is a really good entry right here. See one right here on Thursday at 11 or 12:07. All right, so there's a pretty good setup right here. The reason why I say good setup is because there's a lot of confluences here. So again, let's identify the direction of market here. So I will say that the sellers were in control right here. The buyers were in control right here. And I'll kind of give you guys a little storyline so that you guys can kind of see and follow. Okay, so let's start from like way back here. The entry happens right here, but I'm going to show you from way back here first. And this is a good example because we have this is considered an A++ entry. So I'll put this over here, the scenarios. Okay, so first, we'll just start from here. If you guys can see why I identify this as the direction of market, we have bullish buyers in control right here. The reason why I have that is because you can see this is a low part. So this red candle right here is a low, right? If you have the high-low indicator, I mean, you'll have that on there. I just don't put it on because it overlaps with the engulfing and the, I'll just say the reversals over here. So I don't really want to leave it on. But if you had the indicator on, you can see that is a low right there, right? So the reason I have this with buyers in control is because we have a low here and price never comes back down to break this low, right? And that's not the only reason. So we have a low here. That's going to be step one. Identified a low point here. So this is the floor. And then right here, you can see there's an engulfing candle. This candle engulfs this one. And then we have another engulfing candle right here. There's actually another entry here. We'll use this as the first example then. This is actually a really good example right here too. So let's just Now that I go back to here, this one's actually a better example than the current one, but I'll show you an example for this one, and I'll also show you an example for this one here. But let's just go back to this here because this is a pretty good example. Or let me check real quick. Entry would have been. Actually, I take that back. This isn't a really good example. It's a good example, but it's not a really good example. This wouldn't fall under an A++ entry. This would just be a regular entry. So for this one over here, we have, I'll just replace this specific entry candle. Yeah, this is just a regular momentum pullback scalp entry. So we identify the direction of market. We have a low right here, price pushes up, never really comes down. So we have the buyers in control at this point. That's going to be step one, identify current direction of market. For step two, you want to identify momentum in the direction of market. We have a buy signal right here, step two. Step three, identify retracement against direction of market, which is going to be right here. Step four, you want to identify a confirmation of continuation in the direction of market. So right here, this green candle, you want to make sure that it breaks and closes past the momentum, which it does. So bullish momentum, retracement, continuation. Once you have that there, you can enter this for a buy entry. This kind of has like one confluence, but it wouldn't be considered an A++ because it's just one confluence. These over here have three confluences. So not necessarily bad entry, but not what I consider a super great entry. So direction of market is bullish, buy signal, retracement, continuation. Entry would happen right here. The ATR is 20. So I just go for a 20-20 on this or a 20-30. Let the trade run from there, retraces down a little bit. Actually, for this one, I use the actual, what I typically use 30, because it was above 20 here. I would only use 20-20 if the ATR is below 20, but right here is 20.24. So this is a problem because if one candle pushes down, it can easily stop you out. So I would just use 30 to cover whatever is like retracing back. This is also late in the session at 11. So I mean, I wouldn't have taken this entry. I'm just using this as the example. So price comes down a little bit, retraces, and then eventually it comes back up. And eventually hits TP right there. So I wouldn't consider this a great entry. This is an MPS entry, MPS V2, but I wouldn't consider it great. So it doesn't fall under the A++ entries. An A++ entry would happen on this next one over here. So let's go forward a little bit, and I'll show you why this one is different and why it qualifies as an A++ versus one of these regular ones over here. Okay, so with this specific entry, again, we're going to go over the criteria. First, you want to identify direction of market. Right here, we have the buyers in control because there's a low right here. And price never comes down to break in. So the sellers are obviously not in control here. The buyers are in control. On top of that, we have two confluences. So we have an engulfing candle right here. And we have another engulfing candle right here. I know these are two green candles, but this one is still engulfing this one, and this one is engulfing this one. So we have two criteria here. We have three criteria, actually. So we have three confluences. For one, price has established a low right here. Price never came down. That's one confluence, indicating that the buyers are in control. And then second confluence is we have this engulfing candle. This is a reversal candle to the upside. On top of that, we have another one right here. So this is going to fall under MPS, or it's going to fall under scenario number one. So if you see over here for momentum pullback scalp A++ entries, we have reversal continuation, MPS V2, entry on the MPS V2 close. So with that said, you can see this right here. We have a reversal continuation candle, and then the MPS entry happens over here, right? So again, let's go over the criteria. Step one, identify current direction of market. Right here, it's bullish for the reasons I just explained. For step two, you want to identify momentum in the direction of market. So right here, we have a momentum signal for a buy. The buyer is in control, so that fits criteria number two. Criteria number three, you want to identify retracement against market direction. So right here, we have a sell or not a sell candle, but it's a red candle. This is going to be a retracement because we have buyers in control here. Price is pushing up. This red candle right here is a retracement. And for step 4, you want to confirm a direction or confirm continuation in the direction of market. So you want this candle here to close above this momentum, which it does. And once you have that set up right there, this is an NPS V2. So not only is it an NPS V2, it's also scenario 1 here for an A++ entry. And the reason for that is because we have a reversal continuation, and then the NPS here. This gives you confidence that the buyers are really in control here. So when your entry happens here, you're expecting the price to fly, right? And then so your entry would happen right here. ATR is 16, so in a situation like this, you can use a tighter TP stop loss, or if you don't care to use a tight TP stop loss, you can just stick to the 20-30. You have that set up right there. Price runs in profit right here. Eventually comes up. And it hits your TP right there. It takes some time, but it does hit right there with like little to no drawdown. So this is the main difference between just a regular entry like this one right here and A++ setup. You can see over here for the regular entry, we did have some drawdown, some retracement. Over here, very little to no drawdown or retracement. Because this one had more criteria. It doesn't happen as often, but when it does happen, it usually hits. And this is late into the session. This is at past 12 o'clock. So basically an hour before close. So yeah, for this here, this is the setup, and this is kind of what you want to be looking for. We'll look for some more examples here. If you guys have any questions, feel free to put them in the chat. I do see a couple of questions over here, so I will see what Steven is asking and are. All right, so Steven said US 30 crashed a lot yesterday. Gold increased a lot. What links resources can we use? So I'll be prepared for next time. I mean, you can just check news if you like, Steven, but there's no way to know exactly there's no resource to tell you, hey, Steven, like this is going to go up or this is going to go down. You have to understand how to analyze the fundamentals. There's no one place that's going to tell you like, hey, Steven, price is going this way. Like you have to understand how to read the fundamentals, because those movements happen based off the fundamentals. Like on Friday, it was NFP. That's why price moved like that, because the jobs data was released and the inflation data was released. So yeah, I mean, unfortunately, if it was that easy, Steve, like everybody would have a way to just trade a certain way, but it's not that easy. You have to be able to understand the fundamentals, but also you have to understand that the fundamentals aren't going to move the way that they should. Because the news happened a lot last week, but it doesn't necessarily mean that price moved in that direction. It actually moved opposite, and then it moved in that direction later. See, ARK is asking, if we lose the first trade, is it advisable to stop and only trade one trade per day versus trade until we reach the target? Back in the day, we did one trade per day. Do we trade again if you call another? For me personally, I take one trade per day. Or I take a high contract size, like I take a full contract size, and I just take one trade. Well, I don't just take one trade, but if I ever take a loss, then I'm done for the day. So I'll take more than one trade, but for the most part, if I lose, I'll pretty much be done for the day because I'm taking a full contract size, so I can't lose more than once a day. For a while, I was taking half contract size, but now that I'm only looking for these A++ setups, I'm only looking for like one entry. Like one really good entry, maybe two of them, if they're available. Because they don't come up very often. They might come up like once or twice per session in the morning. Let's see, ARK's asking for a 50K challenge. Do you know what contract size is recommended? Target TP and stop loss. I mean, it just depends on the strategy you're applying. If you're applying this strategy, you would use depending on what the market conditions are, right? If the ATR is too low, then you can use a 20-20. If the ATR is too high, you can use something higher. But if you just want a fixed TP stop loss, I would use a 20 TP 30 stop loss. so that you would still reach your TP, but you'll have a big enough stop loss to protect your position in case something like this happens, where the ETR is too high. For your contract size, I don't know what your max daily loss is on 50K. I've never traded a 50K account, so let's see if I can find it here. Let's see what we got here. All right. So for 50K account, your max drawdown is 2,500, right? 2,500. Let's see, ARC, if I want to pass a 50K valuation in 3. So you mean 3 trades, or I'm assuming you mean 3 trades, right? Because you want to get one and done basically right away. Unless you mean 3 days or 3 weeks. Here, let's do the math here. If you want to do it in 3 days or 3 trades. See, I mean, you're probably not going to be able to do it in 3 trades because your profit goal is higher than your threshold. So you have to do probably more than 3 trades. I mean, if you really want to risk it, you can, but I'm not going to recommend it because that's like 2 trades. You have to. I give you at least 3 trades. Oh, 3 weeks. Okay. Okay, now you're talking. All right, I thought you meant 3 days. Okay, 3 weeks. So if you want to pass it within a month, let's aim for. Let's allow you to have 4 losses before you blow the account, right? So 2,500 divided by 4. So 625. This is how much you can lose per trade. If you lose 4 days in a row, you blow the account. If you don't lose 4 days in a row, which is very unlikely because we're only looking for these A+ setups, right? We're only looking for these A++ setups. So, I mean, as long as you're sticking to the game plan and you're not taking risky trades, I think you should be fine. Because that's a lot of trades to lose back to back, 4 trades. So let's do the math here. I kind of did the math already, so good thing I had this done already. Let's see. So if you do 4 contracts, you can make 600, or your risk is going to be 600. Let's do that. So 4 times 5 times 20, 400 per trade. You need to have, I think, 3,000 to pass. So 3,000 divided by 400. You basically need 7.5 wins, Art. That shouldn't be too bad, right? If you trade, I mean, for the most part, basically every day, you should be able to lock in maybe 1 or 2, at most like 1, maybe 2 or 3 trades at most, but at minimum, probably 1 trade. So you need 7.5 wins to pass your eval, your 50K eval. That shouldn't be too hard in 3 weeks, right? Because you have 3 weeks, you have basically 15 days or 15 opportunities to catch at least 1 trade, like 1 really, really good trade. So what I would recommend is use a 4 contract per trade, and you gotta have 7.5 wins. So that's basically like 2 weeks of trading if you take 1 trade per day, or if you skip a couple days or some days you don't have wins every day, then maybe the full 3 weeks. But yeah, you should do 4 contracts. I think 4 contracts would be good. If you really want to bump it up and take a higher risk, you can do 5, but I mean, I wouldn't necessarily recommend 5 because your max daily loss is 2,500 divided by 750. I mean, you'll be really tight. You can only lose 3 trades. It's kind of up to you, Art, like how comfortable you feel. If you feel really comfortable in following the game plan here, then you can go up to 5 contracts. If you do 5 contracts, you're gonna pass a little faster, not that much faster, but let's see, 5 times 5 times 20. So you'll do 500 per win. Your passing is 33,000. Okay, 3,000 divided by 500. So you basically cut it down by 2 trades. So instead of having 7.5 trades to pass, you only need 6 to pass. Yeah. So I mean, you have a choice. You can use between 4 or 5. You can probably start with 4, and then once you start to feel more comfortable, you can bump it up to 5. But 4 or 5 should do you good. You'll need between 6 and 8 trades to pass. So basically 6 to 8 good trading days. we should be good for within a 3 week period. All right, so okay, remember when I started posting at Apex in the group, y'all were still on forex. I mean, we've been on Apex for like over a year, Art. So I'm not sure when you started posting Apex. Well, we've been on Apex for a long time now because FTMO kicked off US clients like 2 years ago. So we've been on for almost like 2 years now. I don't know what's the exact date, but whenever MT4 got shut off to US clients, that's when we started trading on Apex. I mainly trade on my personal account, but I do copy my trades to Apex and Tradeify as well. All right, so your max loss is 2K. If your max loss is 2K, you gotta have a smaller, yeah. So if that's your max loss, it's smaller than Apex, I believe. How much is Apex? Let me check. Apex is 25, I think. And I hate the Apex website. It's so slow. When you try to go back to the 50K, yeah, it's 25. Okay, so if your max dog drawdown is 2,000, we'll divide that by 4. Then you'd have to use 3 contracts then, or I wouldn't use anything. You could use 3 or 4 contracts, but you're gonna be kind of pushing it. I'd probably just leave it at 3 contracts. Because at 600, you're kind of pushing it. Yeah, I mean, it'll be the same as like what we talked about Apex. But yeah, if you feel comfortable, do 4. If you want to just keep it simple and easy, keep it at 3. That'll keep you less stressed out because you won't be reaching your trailing drawdown anytime soon. Yeah, no problem, Art. Yeah, CJ said got kicked off FTMO at the end of 2023, but some people were already trading on Apex before that. Yeah, I know some people were trading on Apex before that. I just didn't want to make the switch because I was already like fully funded on FTMO. There's like no need for me to make the switch. But yeah, I mean, also I didn't trade on Apex initially because I thought it looked like a scam to me. Like Apex, the website back then looked super scammy, and it didn't look legit at all. I know people were talking about it, but I mean, they've proved that they aren't a scam. So yeah, I mean, it took a while for me to trust before I started using them. See, Denise is asking, hi Sean, how do you define and identify momentum without using your indicator? If you want to do it through raw candlesticks, I mean, it's really difficult. I can see it, but like for me to explain it to you, like I've been trading for a long time, and it took me about like 4 years to create that indicator. So I mean, I could kind of show you. Here, let's see. I'll just like see how I identified the the buyers in control right here. So see how the buyers were pushing price up, and then we had a strong body candle right here. Like that's how I would identify the momentum. The thing is, my momentum's indicator over here, it identifies by using certain data points, like basically the body here, right? See how this body is a pretty strong body, and it has not a very big wick on the bottom and not a very big wick on top. Like first, you would have to identify the floor, which obviously is right here. This right here is kind of a weak candle, right? It has a big wick on top. This is a weak candle too. It has a big wick on the bottom. This one right here has a big wick on top. And this one here is like probably the most normal candle following through. So for this one right here, this is how you can see sort of how this is how momentum is identified. I mean, it's not going to be easy for you to spot. It's easy to spot because I have all my tools on the chart for you. Like obviously, everything here makes it a lot easier to see. If I took everything off the chart here, it's not going to be as easy for you to identify that stuff. That's why I created the indicator, because if I didn't create this indicator, people wouldn't be able to identify this, right? It's just too difficult. So, I mean, same thing here. Like I said, identify the floor. It's a weak candle, weak candle, weak candle. I wouldn't consider this super strong, but it's the most normal candle. So this is where the momentum would come up. And that's why the momentum came up right there. Identifying momentum the other way. So like, for example, right here, it's when you're doing it by like naked chart, it's like very subjective. That's why like the indicator is like kind of necessary to really know exactly where. But there's a lot of different areas that you can find momentum here. The thing is, I think momentum showed up earlier. So like it might have showed up somewhere around this area, but I can see there's a high here and some strong candles. Yeah, and it happened like somewhere around here. See, because this here was a little too strong of a candle. This was a high point, price pushed down, weak candle. This was the first kind of strong body, but it wasn't super strong because it's still kind of a small candle body. Right here, I probably would identify this as momentum as well. So high point right here. I would say kind of strong candle, but again, I probably wouldn't call this one here because it's like the first candle after. I would just call this like, first push to the downside. Weak candle, somewhat weak candle right here. This is like a doji. And then I would probably consider this one or this one right here the momentum. So that's how I would identify momentum. Same with this right here, right? High point. You obviously wouldn't count, this wouldn't be considered momentum because, or I mean, I guess you could. You can see the momentum was trying to close on this one, but it ended up closing on the following one. The problem with this here is because you can't really confirm that this is like the actual push down, right? Because if you just have two candles there, you have the high point, but you can't really say, oh, this is price pushing down and there's only one candle there. So I would probably identify this as a high point. I would be like, okay, this is the first bearish candle. This is a weak bearish candle. This is an okay bearish candle. And this is probably the best one, right? So this candle or this one over here, I would identify as momentum. And you can see how price pushes down from here. But again, like I said, that's the whole reason I coded it into like specific data points so that I don't have to look for that. Same with this right here. Price comes down, floor. This is a very strong green candle, but it's the first one, so I probably wouldn't consider that the momentum. Momentum would probably happen somewhere around here or somewhere around here. And yeah, see that's kind of right that I circled earlier. I said somewhere around here or somewhere around here. And that's exactly where the momentum came up because this was the floor, price pushed up. This was the first candle. So I wouldn't necessarily say, okay, this is momentum, but this right here would be the confirming momentum. The wicks right here aren't very big, right? Same size wick, same size wick on the bottom. This body right here is perfect. So that's how I would identify it there. But I mean, you get the gist of it. It comes with chart time. Like you have to be on the charts. Like you have to spend days, if not weeks, if not months, if not years on the charts for you to see this news. Because the thing is, if you're trading on the 1 minute time frame, it's easy to see when the charts are frozen, right? Like right here, you can see it because the charts are not moving. But when you're watching this in real time, it's not going to be that easy. It becomes almost like impossible because these candles are like moving so fast. You're like, okay, is this a strong candle? Is this a weak candle? You don't even know if this is going to close properly because this candle can be jumping up and down, and then at the last second it closes strong. So I mean, it's really difficult, and it just takes a lot of practice and effort. But if you study the charts enough, you'll be able to see it. It's just going to take a long time. Like for me, it took years and years and years until I was like, okay, this is what happens, and now I need to code this into an indicator so that so I can do it for me. Yeah, exactly. No problem. And you said cheers, man. I can imagine it was a lot of work making the indicators very subjective without them, like you say. Thanks for your insight. Yeah, exactly. No, 100%. And Nisa also said reading price properly is an art form. Yeah. And that's why I have these tools here. And that's why I created, the reversal tools here. Because now that I've created these tools, like, see how I have this stuff right here where I'm like, okay, who's in control? It's the same with this right here. Like, for example, I don't even have the momentum on the chart. But I can see right here that the sellers are in control because we have a high point right here. And then see how we have an engulfing candle right here. This is a reversal pattern. Reversal pattern right here. And the entry could have happened somewhere around here. Right, so we have two confluences. And then let's go back and turn on the momentum. Okay, so this is a perfect setup right here. Let me just go over here real quick. We'll take a look at this here. I'm not going to turn on the pivots because we don't use a trend for this specific strategy. This is actually a really good setup right here. Let me show you guys. So I'll leave the pivots off because, again, like I said, I'm not using the trend here. I'm using market structure. It is actually a really, really good entry right here. This is considered an A++ entry. Where's my A++ thing at? Yeah, and like me said, like reading price action is an art form. These tools help because we're trading on the 1 minute. But if you're trading on the higher time frame, it's not as I wouldn't say it's as difficult. Actually, I haven't even looked at this on the higher time frame, but I would assume that it's a lot easier to see. But anyways, so right here we have an engulfing candle, right? The direction of, and we'll start off, the direction of market here is bearish. And the reason why it's bearish is because we have a high point right here. Price never came up to break it, so it was never invalidated. So price started coming down from this point right here, from this high. Right, so from this high, we have an engulfing candle. This is a reversal pattern to the downside. This means that price is pushing up and the sellers are like, nope, we're back in control. We push price right here. This is the first step. Identify direction of market, which is bearish. This is a confluence here that we have in the engulfing candle. This shows that the sellers are in control. And then we have a sell signal right here. And then we have another engulfing right here, right? That's why I created this tool. Everything I create is for a reason, right? So we have engulfing right here. Price pushes up. It says, nope, we're pushing price down. So we're like, okay, sellers are now in control here. We have an engulfing, price comes down. We have a sell signal here. It doesn't matter if it's valid or invalid. It just needs to be a sell signal so that you know which direction to be trading in. So identify direction of market, bearish, identify momentum and direction of market, sell signal right here, identify retracement against direction of market. You can see right here, we have a green candle that pushes the opposite way. Number 4, identify confirmation of continuation in the direction of market. So again, right here, we have price come down, retrace, and it pushes down further, but you need it to break and close below the momentum signal right here. That's going to be step 4. That's where this candle comes in, right? So this candle comes in right here, and this is going to be the entry candle. So step 1, confirm direction of market, bearish. Step 2, identify momentum right there. Step 3, retracement. Step 4, continuation. Step 5, enter on the close of the continuation candle, which is right there. The ATR here is, let's see, ATR is 10. It's very, very low. So in a situation like this, you could probably just use a 20-20. You probably don't have to go for the full 20-30. 20-20 is perfectly fine. If you use 20-30, that's okay too, but you don't really need anything too crazy. So now looking at the A++ setups, right here we have a reversal confirmation, right? Or reversal continuation. This is step, like one of the criterias. Right here we have an MPS entry. So reversal continuation, MPS, reversal continuation. This is going to be step or scenario number 2. So reversal continuation right here. MPS happening right here. Reversal continuation on the MPS candle. So you have 3 confluences here: reversal, continuation, continuation. When you have that setup right there, you let the trade run. It pushes in profit, goes down further, takes some time, but eventually it comes down and hits TP right there. It blasts right through it. And that right there is an A++ setup. And you can see this thing came super late too. It came up at it like 11:20. So it's not during live session time, but if you do see these entries come up, if the criteria is met and it's all lined up there, it's usually going to hit. Let's see. Yeah, CJ said, so for example, for that example would be scenario 4. Actually, you're right. So my bad, CJ. It is scenario 4 because it happens on the same candle. Well, scenario 2 and scenario 4 are very similar. It's just on scenario 4, it happens on the same candle. So thanks, CJ, for confirming that. It's actually scenario 4, not scenario 2. But if you look at it if you look at this in order, it's basically the same thing. Reversal, continuation, MPSB2. But this entry candle happens on both the MPSB2 and on the engulfing candle. So it's scenario 4. And I'm glad you mentioned that because scenario 4 doesn't come up very often. And I'm glad we had one right here. Christian said, are we skipping trend meter as a parameter? Yeah, we never really use a trend meter. We've always been looking at direction of market. So for the MPS V2, it's always been following direction of market. I still have the trend on the market, just like, for us to like look at, because obviously if we have more confluences, the better, but it's not really necessary. So, I mean, you can have it there if you want it. You can take it off if you like. But for like these specific criteria, or not specific criteria, but for the setups here, I'm just showing you guys without the trend. Because the trend is not required, but it is an additional confluence if you do want it there. Yeah, if you guys have any questions, feel free to put them in the chat. We went over a pretty good amount of examples here. So I think like the next thing, or if there's anything specific that you guys want me to cover more of, like if you want me to show you more basic entries, or if you want me to show you more scenarios, or if you want me to show you more of like how I identify direction of market, just hop into the chat and let me know so I know what to focus on. Because I mean, everything here, it's pretty straightforward to me personally. It might not be straightforward to everybody, but yeah, whatever you guys need help with, just let me know. Here, let me go over here real quick. So what I'll do is I'll go to a random day. Let's just go to like, I don't know, what's like a random day that you guys can think of. Let's just go to like, I'm gonna pull back over here and see if there's any day that I can just kind of run through this. Okay, let's go to Monday. I feel like this was a holiday. Was the 27th a holiday? Let's just not do the 27th. I feel like the 27th might have been a holiday. Okay, let's go to like Wednesday, January 22nd. We'll just go through the whole day. CJ, let's try it on a trap Tuesday. Okay, let's do that. So, perfect. Well, let's go to 21st. So we are here on the 21st. Market open right here is a perfect trap Tuesday because the market's moving kind of crazy. Let's just let's start looking at criteria. So let me go over here real quick. Let's go and let the market kind of breathe a little bit. Okay, so let's just start here. Right here we have a low point. Low points right here. We have an engulfing right here. This shows that the buyers are in control, right? Engulfing. Now I'm going to look for price to swing the other way. So we got price pushing up. Ideally, I would want to wait for this to swing the other way first. Okay, so the sellers might be in control here. We have a high point. We have an engulfing candle and a V1 right here. So if this here doesn't get invalidated, then the sellers may be in control here. All right, this is perfect. So it didn't get invalidated. We have a confluence right here. Another confluence right here. Now let's see if there's any entries that may have came up here. So we're looking for an MPS V2. Okay, so looking at this, we have confluence, sell signal right here, another confluence, and then this is an MPS V2. Price closes below the momentum. This is the entry right here. I don't know if there was news on this day. There might have been news because this is closer to 7 o'clock. So we'll just kind of run through it and we'll see what happens here. The ATR is super high. So I think a situation like this might rather go for a 30-30 instead of a 20-20 or 20-30. I think there might have been news right here because you guys can see how crazy these candles are moving. I think there might have been news here at 7 o'clock. I don't know for sure, but the way that these candles are moving, I'm pretty sure there's probably news right there. Yeah, so let's let's skip like there's usually news at 7 o'clock and there's news at 6:45. So the times where news comes up will be like 6:45, 7, and 7:30. We'll try to avoid trades around these times because that's usually where high impact news events come up. I'm pretty sure there was news on this day on the 21st. Yeah, let's see. I could probably pull up the calendar. But I remember this day. I remember this trap. I think I even took a loss on that day. Let's check the 21st. So I actually took a win on this day. But we didn't take any sells that day. So there was probably news at 7 o'clock. Because it looks like we took the initial entry and then we just stopped trading from there. So anyways, let's just keep going, see if we find anything else here. Okay, buyers are back in control right here. Or trying to at least. We have a V1. There's no setup here yet. That's a red flag right there. So we got a V1, we have an MPS V2 that was setting up here. There's no third criteria, so this doesn't meet a E++ setup. There's still no other confluence. There's only one confluence right here for a V1. Okay, so right here, there's a couple confluences. The only problem here is that it's at the sessions. So I mean, this was a trap. This was a typical Trap Tuesday type day. I don't think there was any entries that we would have taken within this area. Looks like there might have been news, and then also looks like there was probably, I mean, price was at the red flag, so I just wouldn't have taken trades around this area. Otherwise, buyers were in control here. We had MPS V2 that's set up right here, but obviously red flag. Right here as well. Price pulls down, pulls up. It's at the sessions, another red flag. And then the engulfing happened right here, but again, the engulfing happened right at the red flag, which we just wouldn't have taken the trade there. Let's see, I'm gonna say the sellers were in control right here for a little bit. And then the buyers came back right here. So buyers came back right here because this was a low that wasn't retested. There was an engulfing and then a V1 and then an MPS V2 happened right here. Okay, so I think this might have been an entry that happened like right after the live because this was at 8 o'clock. So depending if we were still trading at 8 or not, I mean, this trade might have been missed, but let's just look at the criteria. This does validate as a A+ setup. We have an engulfing right here. We have a V1 right here. This low right here never gets invalidated. We have an MPS V2 right here. Price pushes up, retraces, confirms right there. That's a setup for an MPS V2. Setup right here. Price retraces a little bit. Moves back up. Back up further, and it shoots right through. So there goes the setup right there for this was an A+ setup. So this is like I think the only setup that came up on Trap Tuesday that would meet the criteria. Because obviously these over here wouldn't meet it. Red flags right there. And this is the first one that happened outside of the red flags. So we had buyers in control from this candle here. This is the low point. Low never got broken. Engulfing, V1 variation, 2 confluences right there. MPS V2 pushed up right here. Entry would have happened on this green candle. As soon as that closed, you would have entered a buy. Price retraced down a little bit. and then it shot all the way up to its TP there. If you wanted to use a 30-30, you could have. I think the ATR at that point was pretty high. That wasn't that high. It was like 19. I mean, either way, if you use a 30 point TP or a 20 point, either one would have been fine. So there goes the setup there. If you guys have any more questions, feel free to put them in the chat. I think we covered a lot of good examples here. But I mean, all the examples are going to be very similar. Here, let's just keep pushing through this day and see if there's any more entries. So I'm looking now for the sellers to be in control. So we can flip the other way. So basically, when I take these entries, guys, I look for one entry in one direction. So we have buyers in control here. I only look for one buy. And then for sellers in control, then I'm going to look for one sell. So right here, I can say the sellers were attempting to be in control. This is a high point right here that never got invalidated. We have an engulfing candle right here. That shows that the sellers were in control. Okay, we have a couple of things here. So we have the sellers in control right here. We have an engulfing. We also have an NPS V2. So sell signal, retracement, confirmation. This is an NPS V2. And now I would enter another trade on a confirmation again below. So if I see another engulfing or a V1 to the sell side, that's where I'd possibly look for another sell entry. But it looks like the buyers are back in control here. So here, I would actually be flipping to a buy. Buyers in control from this low, engulfing. There's actually two entries here that we're running. So this right here, we had the buyers in control, we had an engulfing. So this is an MPS right here, and then this is an engulfing. So at this point over here, we have the MPS. And this is why I like these confluences, because they line up with each other. We have a buy signal right here. This is an MPS. We have an MPS running from right here. So we got an MPS running from right here. And then on this next candle, this is actually where I would have taken my entry. I wouldn't have gotten in on this MPS. I would have gotten in right here after this candle. I would have gotten in as an engulfing. So let's go back to our confluences over here. Our A+ setups. So I think you like this right here, CJ, because this is like, you don't have to get in at an MPS. You can get in at an extra confluence. So buyers were in control right here from this low. We had an engulfing. This engulfing was also an MPS entry. So you got two of them knocked out right there, right? Engulfing plus MPS. And then you got another engulfing right here. That's going to be this scenario right here. So this one would be right here, scenario number 3. So MPS, reversal continuation, enter on the V1 or engulfing close. So this is the MPS. That's the first one. We have engulfing and then another engulfing here. So the entry would actually happen right there. And you got two trades running in the same direction. So you'd have the MPS that hit right there first, and then you have the engulfing that hits after. I would have entered on the second entry. So you see how this stuff works out? Like, this is why I like these types of setups, because they follow in line with each other. Like if you miss the MPS, then you get in on the engulfing or the V1. And this is like very similar to the entry that we saw today. Today we had one of these come up on a live session this morning. We had an MPS that came up first, and then right after was an engulfing, and then both of them hit. So it's pretty cool when you have them set up like that. I mean, they don't happen all the time, but when they do happen like that, it gives you confidence in your entry. Like say, for example, you were in the MPS and you were kind of worried about it because it retraced back a little bit. Now that you had this confirmation of an engulfing, you're like, all right, the buyers are for sure in control, and I don't feel scared about holding on to the position longer. And you can even adjust your TP stop loss to go for the farther target. So, all right, guys, I think this might be it. If you guys have any more questions or if there's anything else you want me to cover, feel free to hop into the chat. We've been on this session for a little over an hour. I'm okay with staying on longer, but only if you have questions. Otherwise, I think everything here is pretty much self-explanatory. The next thing for you guys to do is really just back test this yourself. Today, I'm going to try to do some more testing on this tool, and then hopefully I'll be able to enable access by tonight, if not by tomorrow. So, all right, guys, I don't see any other questions here. All right, one more question from CJ. CJ said, wouldn't the 825 be an A plus plus 2? Let's see, 825. 825, which would be. So I wouldn't take anything after here. CJ, I mean, let me look at the criteria, but I wouldn't take anything after because, like I said, I only take one entry per momentum. I mean, the momentum could have reset here though. So let me just take a look. You said 825. I'll just replay to that candle right there. Or let's measure it first. So 825, which is right here. So this would be at, I mean, it would be like on the dot, CJ. Like it'd be literally at the 20 points. But let's take a look. So okay, let's kind of chop it up a little bit. So we got the buyers in control right here. Then we got the sellers in control right here. Then we got the buyers back in control. Or, I mean, that doesn't make sense because we already had the entry up here. So let's just have the sellers in control from right here, this high point. There's a high point right here, doesn't get invalidated. Engulfing. And then we have a high point from right here. It just gets tricky when you chop it up like really tight like that. But regardless of the fact, I mean, we still have the buyers in control right here. So let's chop it up real quick. We had buyers in control here, sellers, they didn't really get in control, but they did try to push price down right here. It didn't get invalidated. So this high right here never really got pushed through. I mean, technically it would have, because you can see this candle right here. Let's just measure it. I guess you could say it never got broken. It got tested, but not broken. Right there. Because if that high gets broken, then the sellers never got in control at this point. Like if that was the case, I would just say, okay, the buyers have been in control since this earlier time. Because what happens here is if I have my entry right here, CJ, then I'm not looking for a second one, right? Because I'm done with this and I'm waiting until the price flips the other way. And then I'll look for it to continue in that direction again. But just say from hypothetical instances, we'll just say, okay, the sellers were probably in control right here for a little bit. And then the buyers came back into control right here. And it would kind of depend on like where you identify where the buyers would be controlled. Sometimes like you would mark up this area. Sometimes you mark it up from this area right here. It's a little subjective because there wasn't really a push down. It was just a sideways move here. But let's analyze it from how you see it. So 825, we got the buyers in control right here, engulfing. No, actually, this wouldn't meet the criteria because there's no MPS in between. Right, you need an MPS at least to come up in between this area for there to be an A plus plus. Because for all the A plus pluses here, there's got to be MPS either it starts with the MPS V2, ends with the MPS V2, or it happens somewhere in the middle. Yeah, CJ said got it. I saw the second green momentum, thought it was a go. Yeah, you're talking about this one right here, right? So yeah, if you didn't identify this first one, then I mean, yeah, technically you could have looked at this one, but like for me personally, I only take one per direction. So if we have the buyers in control right here, I would only take one per push up. But yeah, I guess if you miss this entry right here and you're like, oh, I missed it. And let's act like that entry never came up, right? Let me clean this up a little bit. We'll just be like, oh, this entry never came up. So we would say the sellers came back in control right here. And then we'd say the buyers came back in control right here, right? And this is why it's cool because you can kind of play around with it. You can kind of figure out like okay, this is where I see the confluences and this is where I see the direction. There's not always going to be a one size fits all. Everyone's analysis is going to be different. Like if you were watching from market open until now, you would have this whole marked up already, right? But if you were just starting to trade here at 7:30 and you missed this whole move right here, you would have been like, okay, it's starting from this point. So the sellers were in control here. We had a high point engulfing, price pushes down. Then we have the buyers in control right here. We have price pushing up. We got one engulfing right here. Okay, so looking at this here, CJ, there actually wouldn't be an entry here either because there's no yeah, there just wouldn't be an entry here because the MPS happened, then engulfing. The other entry would have happened like right here at 8:19. I mean, you said over here at 8:25, but the entry actually would have happened right here at 8:19. Because what would have happened here is we got the MPS on this candle. So this is MPS, this is the confluence, right? So we started with scenario 3, MPS, reversal continuation, and then the next one happened right here. So this is actually where your entry would have happened. And you see how like there's more entries here? Like this is cool because, you know, if we were looking at the markets at different times, like say, for example, you stepped away from the computer and you were watching the live session, you're like, okay, I'm gonna come back at 7:55 for whatever reason, right? You're like, at 7:58, I got back to my computer. I didn't see what Sean was doing over here, so I'm gonna analyze from right here. So if you analyze right here from 7:58, you'd have been like, okay, sellers in control, buyers in control, MPS, engulfing, another engulfing right there, and this is where your entry would have happened. It would have happened right here at the 8:20 candle. And then you would have taken that there. So there's a lot of different opportunities here. You could have gotten in from here if you identify the first one. Right? That's one. If you missed that one, you could have got it in right here. I mean, this thing would have taken forever to hit, but it would have hit. Or you could have got in right here. There's like 3 different opportunities for you here to get in from CJ. And I think that's the best part about the strategy. It's like you could miss a couple entries, but you can still get in a little later. You don't have to get in like exactly at this specific point. Like if you miss that entry, just wait for the next one. It's probably gonna come up again at some point. So so CJ said, would that just be an MPS at 8:19? 8:19 would be this is an engulfing candle. There's no MPS there. The MPS happened over here. So the MPS happened here at 8:08. Because see how this candle broke the momentum right there? There was a buy signal right here, retracement, confirmation. So this right here would be the MPS. This right here would be an A++ setup. It'd be scenario 3. Because this setup over here started with A+, it started with MPS and then it ended with A++ right here. Because MPS, so let me just delete this. Or I'll draw. This right here is MPS V2. This is MPS V2 plus engulfing. And this right here is A++ setup. See the difference, CJ? Yeah, I know it's kind of confusing at first, but like once you test it out and you kind of like you understand it, because there's just a lot of different scenarios here. And you just look at these in order, right? It's MPS V2, reversal continuation, that's where scenario 3 capitalizes, and then that's where you take the entry. So it's cool because you can miss the first entry, you can just get in on the next one, but you have better confirmation here because you have like an A++ setup. All right. So, all right, guys, I think that's it for the day. If you guys have any more questions, feel free to hop into the Discord and message me or type into the chat. I don't see any other questions here. Yeah, CJ said excited for tomorrow. Yeah, no, I agree. I'm excited for tomorrow too. It's now that we have these A setups, I'm confident with upping my contract size and just really looking for these specific entries because they hit. And when they hit pretty often. So, all right, guys, I think that's it for the day. Yeah, CJ said thanks, Sean, for this impromptu session. You didn't have to do it, but you did anyways. Yeah, no, of course. And I'm glad that you asked because I know a lot of people have been waiting for a mentoring session, but people are just too scared to ask. It's like, hey, I'll come on if you guys ask me. It's just I don't like going on mentoring sessions and then nobody shows up. It makes it kind of pointless because I have nobody to mentor. It's like kind of just me answering my own questions. So. All right, guys, I think that's it for the day. If you guys have any questions, feel free to hit me up on Discord. Otherwise, I'll see you guys here tomorrow for the next live